Assalamualaikum and good day I wish to Dr. Azlina and the rest of audience. I'm Muhammad Hafiz, one of the group members of Lexus, and here my team members Izzat, Razief, Faeeza and Farhah. Today we will be presenting about revenue. The presentation will be allocated to 5 main sections consisting of definitions, example of revenue from different industries, revenue recognition, issue and summary, which to summarize what we have presented in the whole video. Without further ado, let's get started with to know where the revenue come from in the annual report. As you guys can see on the slides, revenue will be presented on the statement of comprehensive income, and there is note 17 which shows the two main types of revenue sources. According to the example taken from the annual report 2020-2021 of Nestle Berhad, the main components of revenue coming from the revenue contract with customers and revenue from other sources. If we take a look at the revenue from contract with customers, there is only one contract which is sale of goods, while the other sources are coming from dividend income. All these items will be explained in the next section. Next, I would like to move on to the definitions where it's divided into two definitions which consists of MFRS 15 and conceptual framework. For MFRS 15, revenue is defined as income arising in the course of an entity's ordinary activities. And for the conceptual framework, revenue is the gross inflow of economic benefits during the period arising from the course of the ordinary activities of entity when those inflows result in increase in equity other than increase relating to contributions from equity participants. According to conceptual frameworks, income is separated into two, which are revenue and gain. But on this presentation, we only focus on revenue. Next, looking at the conversation between the two main on this slide, I will ask you the same question. Do you guys know that there is two main sources of revenue? Okay, based on the previous quick quiz, yes, there are two main sources of revenue, which are revenue from contract with customers and revenue from other sources. Revenue from contract with customers applies to all contract with customers except leases, insurance contract, financial instruments, guarantee, and certain non-monetary exchanges. And if we refer to revenue from other sources, it's different from revenue from contract with customers. Examples are interest income, dividend income, and rental income.
Hi everyone, today I will present and explain about the examples of revenue from various industries. Next, there are several industries that we took as an example to show about revenue from contract with customers. First and foremost, for manufacturing industry, we select Nestle Malaysia Sdn Berhad as a sample to show how the revenue from contract with customer had been presented. As shown on the slide, we can see that revenue from contract with customers of this company comes only from the sale of goods. Revenue from the sale of goods is recognized when there is a transfer of control over a product to the customers and is measured based on the consideration specified in a contract, net of pricing allowance, other trade discounts, and price promotion to the customers. This revenue is recognized at point in time upon transfer of control of the goods to the customers. The amount of revenue recognized is based on the estimated transaction price, which comprises the contractual price net of the estimated volume rebates. For the plantation industry, we select Samdabi Plantation Berhad to show about the revenue of contract with customers. Basically, Samdabi Plantation Berhad makes a disaggregation for their revenue from contract with customer. There are two main revenue streams that this company generates from, which is sales of agricultural produce with refined palm oil related product and also rendering of services, which is provision for freight, tolling, and other services. For the sales of agricultural produce with refined palm oil related product, the revenue is derived mainly from its upstream and downstream operations. In the upstream operations, the revenue is from sales of agricultural produce such as crude palm oil, fresh fruit bunch, palm kernel, rubber, beef, and sugar. While for the downstream operations, revenue is derived from sales of refined oil related products and provision of freight and tolling services. For the upstream operations, it will be recognized net of discounts and taxes collected on behalf at the point in time when control of the goods has transferred to the customer. For the downstream operation, both freight and tolling services are recognized at a point in time. The freight services are recognized in the accounting period in which services are rendered, while the tolling services are recognized in the period in which the manufacturing activities are performed. Next. Advancing to the following slide, for the transportation industry, we choose capital A Berhad. There are a few main revenues from contract with customer that capital A Berhad generates from, such as aviation, logistics and freight services, and also online travel and e-commerce platforms. If we look into the aviation part, passenger seat sales is the highest revenue earned by capital A Berhad. This passenger revenue relates to scheduled passenger flight and charter flight income and is recorded net of discounts. Passenger revenue is recorded when the air transportation service is provided, which means it's been recognized at a point in time. Other main revenue that give capital A Berhad the high revenue earned is logistics and freight services. Logistics and freight revenue is a distinct performance obligation and recognized upon the completion of service rendered net of discounts. Next, for the KPJ Healthcare Berhad, in healthcare industry, the revenue from contract with customer consists of the main revenue, which is revenue from hospital and healthcare charges, tuition fees and management fees. Revenue from hospital and healthcare charges mainly comprise inpatient and outpatient hospital charges. Inpatient revenue is recognized on a daily basis as services are provided or goods delivered to patients. These services are typically provided over a short time frame, such as the use of medical equipment, drugs, nursing procedures, room charges, and others. Outpatient cases generally do not involve surgical procedures, and revenue is recognized on an individual component basis when performance obligations are satisfied. The outpatient revenue charges are identified as separate performance obligations as the services are separately identifiable. This revenue is recognized at a point in time as services are rendered or goods delivered. For tuition fees, the revenue will be recognized within the semester of each course offered to the students. Each number of semesters are identified as a performance obligation, and the transaction price is allocated according to each semester based on the cost plus margin. The revenue will be recognized over time throughout the semester, but non-refundable registration fees and enrollment fees are recognized at a point in time. While management fees are recognized in the accounting period in which the services are rendered to the subsidiaries, and the group has a present right to payment for the services, this revenue is recognized over time. Next, Izzat will be present.
Alright, so we move on to the next slide. Here we will talk about the next two industries, which are the media industry and telecommunication. For media industry, we chose Media Prima Berhad to show about the revenue from contract with customers. So from here you can tell that there are a few differences between these two industries, where MPB, they focus more on advertising, newspaper, content and other types of revenue, while DG mainly focus on telecommunication and sales of devices. So from here, if we take a look at the highest revenue earned by Media Prima Berhad, it is coming mainly from the advertising revenue. And I'm going to explain a bit about advertising revenue. So advertising revenue mostly consists of advertising on television, radio, newspapers, digital platforms and outdoor display advertising. Advertising revenue on television and radio are generated in the form of airtime advertisements and advertising embedded in sponsored programs. These revenue are recognized at point in time when the airtime advertisements and sponsored programs are broadcast on the group's television and radio stations. So digital advertising and newspaper advertising are also being recognized at a point in time. And next, for DG, the telecommunication industry, the main source of revenue from contract with customers is coming from the telecommunication revenue. Telecommunication revenue here refers to postpaid and prepaid services, where the benefits of the telecommunication services are simultaneously received and consumed by the customer. Revenue from prepaid services are recognized when services are rendered. Prepaid services here are preloaded talk time, prepaid top up, and etc. While the postpaid services are provided in postpaid packages, which consist of various services such as internet, data, unlimited SMS, and etc. Next. Alright, in this slide, we will talk about revenue from other sources. As you can see, we attach three revenue from other sources from various industry, which are SMW Plantation from the plantation industry, KPJ Healthcare Berhad from the healthcare industry, and Media Prima Berhad from the media industry. So most of the items for this part are the same, and as mentioned by Hafiz earlier, revenue from other sources is not part of revenue from contract with customers. Hence, you can see that these are the common examples of revenue from other sources. First is rental income, dividend income, and also interest income. Next. Well, we have seen two main sources of revenue from various industries. So how about revenue in financial institution? Are there any difference between the industries that we had mentioned before? So let's take a look at it. So when it comes to financial institutions, there are slightly different ways of presenting the revenue in financial statements. There are two different components to recognize the revenue, which are interest income and also other operating income. Interest income is recognized using the effective interest rate method. And as you can see, the highest interest income earned by RHB Group is coming from the loan and advances. So for other operating income, corporate advisory fees are recognized as income based on fulfillment of the performance obligation, while for the management fees of the unit trust and asset management company are recognized based on the time apportionment method over the period of services. Next. And these are the ways that RHB recognize their revenue. So from here, you may view some items of revenue that are exclusively available in financial institutions and are rarely seen in other institutions or organizations, such as brokerage commission and premium income. Next slide about revenue recognition will be presenting by Faeeza.
I'm going to present about revenue recognition for MFRS 15, which is the revenue from contract with customers. Before I proceed to the presentation, let me simplify on how do we account for revenue from contract with customers. The answer is we use the 5-step model to recognize revenue from contract with customers. I got an idea. To make it creative, we can think about MFRS 15, which is 1 and 5. 5 at the back stands for 5-step model. There is core principle for MFRS 15, which is recognize revenue to depict the transfer of goods and services to customer in an amount that reflect the consideration that the company receive or expect to receive in exchange for these goods and services. MFRS 15 also consists of 5-step model. Let's continue for the 5-step model. Next. Step 1. Identifying a contract with customer. Contract is an agreement between two or more parties that create enforceable rights and obligation. Contract also have 5 criteria. First, the party have approved the contract and committed to perform their respective obligation. Second, entity can identify each party's right to be transferred. Third, entity can identify the payment terms to be transferred. And fourth, the contract has commercial substance. Okay, what do you mean by the commercial substance? Commercial substance is a transaction that can cause a change in the cash flows of the entities. And the last criteria is the entity will collect the consideration that will be transferred to the customer. Next. Step 2. Identify the separate performance obligation in the contracts. The definition of performance obligation is an enforceable promise in a contract with a customer to transfer a good or services to the customers. The entity must evaluate all the goods and services promised in a contract to determine whether there is separate performance obligation. Okay, to be more and understand on the separate performance obligation, we need to consider on how many performance obligation do we have on the product. It can be one or more than one performance obligation. I'm going to give you another example that I took. I'm going to give you an example that I took from Telecommunication Malaysia, TM, financial statements. In their significant accounting policies, TM provide internet, multimedia, and voice contract as a separate performance obligation. This is mean that TM have 3 products they are selling to the customers. 3 products mean already have more than one product. Therefore, these 3 products will be identified as more than one performance obligation. TM also provide data services that cannot be separate performance obligation. Hence, their data services are one performance obligation. Okay, we know that when entity have more than one product, that means they have more than one performance obligation. But when it comes to one obligation, it will get a little confusing. To be more understand about one performance obligation, remember that one performance obligation cannot be separate to become 2 products. In a simpler way, you need to buy both products. I will give you another example. You want to buy coffee latte. Inside the coffee latte, it has coffee and the milk. In order for you to buy the coffee latte, you need to buy the coffee and also the milk. Therefore, the coffee and the milk cannot be separated. Okay, next. Step 3. Determine the transaction price. The definition of the transaction price is the amount of consideration to which an entity expects to be entitled in exchange for transferring promised goods and services to a customer, excluding amount collected on behalf of third parties. There are 3 factors that can affect the estimation of transaction price, which are the nature, timing, and amount of consideration promised by a customer. When determining the transaction price, an entity shall consider the effect of all the following. First, variable consideration. Second, constraining estimates of variable consideration. Third, the existence of a significant financing component in the contract. And fourth, non-cash consideration. And the last one is consideration payable to customers. Next. For example, Step 3 for TM to determine the transaction price is their revenue from wholesale, voice, and data services recognized based on the price specified in the contract, net of the volume discount. A volume discount is an economic incentive to encourage individuals or business to purchase goods in multiple units or in large quantities. Next. In step 4, allocate the transaction price to the separate performance obligations. An entity to allocate the transaction price to each performance obligation in an amount that depicts the amount of consideration to which the entity expects to be entitled in exchange for the transferring the promised goods and services to the customers. An entity shall allocate the transaction price to each performance obligation identified in the contract on a relative stand-alone selling price. There are 3 suitable methods for estimating the stand-alone selling price. First, adjusted market assessment approach. Second, expected cost plus a margin approach. And third, residual approach. Next. For example, in step 4 of significant accounting policies, TM revenue from internet, multimedia, voice, data services, and other telecommunication-related services are based on the separate stand-alone selling price for each component, and the suitable method they are using is expected cost plus a margin approach. Next, step 5. Recognize the revenue when each separate obligation is satisfied. The entity satisfied a performance obligation by transferring a promised good or services to a customer, An asset is transferred when the customer obtains control of the asset. Okay, performance obligation can be satisfied by overtime and a point in time. Overtime is an entity transfer control of a good and services to meet one of the following criteria. First, the customer simultaneously receive and consume the benefit provided by the entity's performance as the entity performs. Second, the entity performance create or enhance an asset. And third, the entity performance does not create an asset with an alternative use to the entity, and the entity has enforceable right to payment for performance complicated to dates. As for the next performance obligation, a point in time. To determine a point in time, they need to consider all the requirements following for the following control. First, the entity has a present right to payment for the asset. Second, the customer has legal title to the asset. Third, the entity has transferred physical possession of the asset. Fourth, the customer has the significant risk and rewards of ownership of the asset. And the last one is the customer has accepted the asset. Next, in this example, the M total revenue accounted for under MFRS 15 is ringgit Malaysia 10,724 ringgit and 60 sen. Then from the total, they recognize their revenue when each separate obligation certifies over time or point in time. In conclusion, TM has more overtime revenue because their services are mostly need the customer to pay monthly. The next slide will be presented by my friend Hafiz.
And here are the examples that we took from Sunway annual report for conceptual framework, revenue from other sources. For interest, advance and share financings, this will be recognized as income on accrual basis, and the rental income will be accounted on a straight line basis over the lease term of an ongoing lease. For interest on lease and hire purchase, recognized as income on effective yield basis method, and the last one, dividends income, recognized when the rights of the group to receive payment is established. Next, we move on to Farhah.
Next is the issue related to our topic, which is how did IFRS 15 affect the revenue recognition practice and financial statement of firms in New Zealand and Australia. This article focuses on the impact of IFRS 15 on identifying separate performance obligation and revenue recognition timing. One major channel through which IFRS 15 affect the financial statement was the change in the identification of performance obligation. One of the samples given is Bravura solution. In some cases, performance obligations that were not previously considered separate are considered separately under IFRS 15 and vice versa. These changes in performance obligation resulted in the deferral of revenue recognition for most firms that disclose IFRS 15 impact on revenue. Okay, next is the standard also cost changes in basis of allocating revenue over time. As we presented earlier, IFRS 15 requires an entity to recognize revenue when it satisfies each performance obligation by transferring goods or service. As shown as the example, Burger Fuel changes the timing of recognizing franchise revenue from a point in time when the contract was signed to over the life of the franchise agreement. As noted, the application of IFRS 15 resulted in identification of new significant financing component and changes in discount rate, resulting in a change in allocation of the consideration between revenue and interest revenue. So, these changes in revenue standard may affect internal performance evaluation, contracting outcomes, and investor evaluation of the firm through its impact on revenue and related financial statement numbers. Okay. Lastly is the summary for our topic. This is the summary of the topic revenue that we have discussed earlier, you guys can take your time and try to understand it properly. That's all from us, Group Lexus. Thank you.